Good morning, everyone. Today's Friday, December the 28th. This is Anne Marie, and this is SPY Outlook. We're taking a look at two things. We've got the VWAP on the week, we got the VWAP on the month. Yesterday, I did think we would bounce. We did not. Here's the difference for me, folks. The only time I step in front of a trade is if all the stars are aligned, like the Google short yesterday. Everything was setting up. Every single thing was setting up. Apple short. Every single thing setting up. I do not step in front of trades. And initially, when I took a look at SPY, I thought, wow, you know what? There's a ton of stuff that's oversold. We should have ourselves a bounce before a pullback. I really believe that. I'm not going to trade what I believe, folks. I'm not stepping in front of the trades. Only in the extreme cases where everything is weighted in my favor. I trade with a stacked deck, a loaded die. I do not get involved unless I am extremely reasonably sure that everything is on my side and very little is on the other side. Okay, so the rule I want to remind you, doesn't really matter what you think the chart's going to do. If you are trading and you'd like to keep high probability trades part of your experience and low risk events part of your experience, you do not get in front of the trade and wait for it to move in the direction that you believe it's going. All right, many of us do not have the capital to withstand that, and we also don't have the intestinal fortitude because we get shaken out. Or it takes so long for us to recover that we deplete so much emotional capital that it affects the way we make future trades. So be very, very careful about that. Let the market tell you where it's going first. You can have a supposition, but let the market confirm that supposition before you step in the trade. All right? That being said, here are the levels we need to watch for. It looks like we've got bounce action here. What did we do? We traversed from the 61.8 to almost right into the 38.2. We actually stopped at this wick right here, just about, maybe one tick below it, and popped very, very hard. Why? Chatter on the hill, really coming into support. Also a factor. Listen, do you see these V's? Do you see them? V's, 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 V's. Why? The market is unstable. When we're sitting in an unstable market, we're going to see the V's. A rolling event, not bad. V's, bad, right? And we're seeing them very, very often. So what do? You trade level to level, and then you get out and you don't expect a trend, all right? Don't expect a trend. And don't be so callous and jaded as to go, yeah, look at all the market pulling back. Yeah, now it's probably going to bounce for nothing. You can't look at the market like that. Just look at it from level to level. Trade it. Don't get disgusted about what it's doing. Just roll with it. Okay? Way too many of us sit around and argue about why the market's moving the way it's moving. Who cares? That's not going to make you money. It is not going to make you money. So stop complaining about it. Just look at how it's working and roll with it. So today, here's the roll. We're going to move right into the 1 hour chart and have a look. This 1 hour chart is going to tell us, listen, we've got this relative congestion somewhere around here, 141.80, then 142.03, then 142.43. And if things are running super hard, we're going to come into the monthly VWAP, 142.81. Not really sure what we're going to do there. Really, I'm not. See, we've broken this C vertex, and so that's a lower level than here. That's broken the overall uptrend that I had in my mind about the general market flow. All right, so if that fails to hold on that big stretch up, we've got real downside going. Now, let's say we're looking at this level and we break the 141.40-ish region, right? The next place that we have congestion is literally just below it at 141.15. And at that point, if we lose that, we've got 141.64 and then 140.64, excuse me. 140.64 and then 140 22-ish, maybe 29, something like that. And then we've got even lower levels to pull into 139.78, potentially a roll. So how do you trade it? Level to level. Stop assuming a trend if you're day trading, right? Now, if you are sitting here and you traded the failure of the Gartley, right, which is right here, you can see easily over the long run through the month of December, all we've done is roll, right? But if you are trading, a day trader, and you're coming in and expecting a trend where you are going to open on a particular level and either end higher or lower in a nice move, not happening. Why? Because momentum is very damp. What happens with momentum being very damp? We retrace a big part of our moves. A very, very big part of them get retraced. Even though we are moving directionally, we have these gigantic reversal events where we push up and then pull totally back. All right? Or pull down and then press totally up, such as in this case. All right? That's enough rambling for me. You've got the levels. Good luck today. Probably going to be a lot of fireworks this afternoon. We've got the full moon. Tomorrow's a Bradley date. These guys are talking about whatever last minute cliff talks on the hill. You know, you got to roll with it and just step through the levels. Here's the last thing I want to tell you. You can tell when you've got reversals coming. If you see pullbacks here, and then you see a pop, and all of a sudden you're making a higher low and a higher high on the candle, and a higher low and a higher high on the candle, and then you have something like this that engulfs, and you pull back into a higher low overall, because that's the low, and that's there, that is telegraphing to you there is upside momentum. All right? Just do what the candlesticks tell you to. That's all. Nice and easy. Have a good day.